The easiest
Yeah.
way to summarize this is you don't get paid what you're worth, you get paid what you negotiate.
Mm,
And I think there are likely a lot of women nodding along, female
yeah.
listeners here,
Yeah.
where they look at the work and their track record, and they might find somebody who is 5, 10 years their junior,
Hmm.
maybe also a woman, but quite possibly a male, and maybe they make twice as much.
Hey there. Welcome to the Speak and Flow podcast. I am so glad you're here. This show is for leaders who care. Leaders who know that when things get messy, the way we communicate makes all the difference. Every week, I sit down with incredible guests, founders, VPs, rising stars to unpack real moments of today where communication matters. We talk about what works, what doesn't, and how you can lead conversations that create trust, movement, and momentum. Because in uncertain times like today, your words have weight. Let's use them well. Let's dive in. Welcome to the Speak and Flow podcast, where we help CEOs build leadership teams to run more of the business with them and not through them. Today, we are talking about why high performers still struggle to paid what they are worth. Joining me on this rich conversation is renowned, the only agent that represents executives. He's been called the billion-dollar man because that is how much he's actually lifted in compensation across portfolios for corporate executives. His name is Jacob Warwick. Welcome, Jacob.
Linda, happy to be here and happy to talk compensation. And it sounds like the topic of working with the CEO, not necessarily against them, which is a hot ticket item once many execs hear, oh, there's a negotiator involved. What are they
Mhm.
going to take from me? Kind of thing.
Yeah.
And so we'll challenge that mindset today and look forward to the conversation.
Yeah, no, I love that. So, just kind of dovetailing off of that, if you think about there's a CEO or executive that is out there listening to this and has stopped their busy schedule, what do you hope could change in this CEO's life just by really taking into account what you're saying today?
Yeah, so the first thing I would do is to challenge the mindset of negotiation being a zero-sum game,
Mm,
or if a CEO is concerned about their executive team or even other members of their team negotiating quote unquote against them,
mm-hmm,
I reject that frame in terms of it's not me trying to take a larger slice of pie out of you, Mr. or
mm-hmm,
Mrs. CEO. It's thinking about ways that we can expand the pie together so there's more value for everyone. And so
yeah.
the too long didn't read or too long didn't listen is what are some ways we can make a deal better for everyone involved so that everyone wins more? What are the motivators or the behind the scenes motivations of everyone that you will be negotiating with? And think about this more as a collaboration versus a confrontation. And how can we work together to solve the greater good for everyone involved?
Yeah, and I'm sure there are people out there that do go into a negotiation with that type of mindset. How much more can I take, and how much more is this person trying to take from me? And especially if they don't have your help. So, for the audience, can you tell them more about what you do and why you've been called the billion-dollar man?
So I work with some of the top executives in the country, primarily usually in Silicon Valley and New York. So those would be kind of the two hotbed areas. And so think about your typical C-suite and or usually your 1.5 million plus annual earners. So anywhere from like 1.5 million to 5 million a year is probably my client sweet spot. And then I've also supported some Hollywood talent in Los Angeles as well as in New York. So sometimes those deal sizes can get quite large. So
Mhm.
anyone from a venture capital backed, private equity backed companies to public companies to your FANG group, your Facebook, Apple, Amazon, Netflix, Google, Microsoft, those types of groups. I've been in that circle for a little over a decade now, and I'm the best way to describe me is that my work is fingerprintless. Nobody
Mhm.
sees what I do,
Mhm.
versus when people think of an agent or they think of Jerry Maguire, show me the money, baby, or they think of somebody negotiating on their behalf. Well, I work a little bit behind the scenes. So my job is to support you, Melinda. You would have conversations with me, and we work through the game plan, the language you should use, the confidence, the low risk, the medium risk, the high risk plays. I challenge you to think about the motivators of everyone in the room and how we can propose solutions so that everyone can win together. And
Mhm.
naturally, that will lift at least others' willingness to want to pay you more while we
Mhm.
do that. But we create greater groundswells for others. And then I'm also very well known for outcome-based compensation,
Mhm. Mhm.
which I guess the easiest way to describe that would be in sports, as an
Mhm.
example, like Tom Brady gets paid or had gotten paid for
Mhm.
winning a certain number of games, getting to the playoffs, winning playoff games, getting to the Super Bowl, winning the Super Bowl, winning the MVP. Each of those types of milestones or outcomes, so to speak, would trigger a new clause in his contract to get paid additional. And
Mhm.
that's because Tampa Bay and or whoever's paying his contract can see when
Mhm.
those things happen, it's better for the team. It's better for the city of Tampa Bay. We sell X amount more merchandise or new licensing opportunities unlock or whatever. So
Mhm.
it makes sense to trigger downstream to better support Tom in that case. So that is the way most people traditionally think about outcome-based compensation, but we don't think about that in terms of kind of a corporate role,
Mhm.
especially when that role is not sales or revenue related. So your
Right.
product leaders, your engineers, your designers, your marketers that have a little distance between, let's say, the work that they do every day and the bottom line of the company, it starts to get a little bit muddier. And so
It
the
does.
outcomes that we need to create
Right.
start to look a little bit differently. And that's what we propose in instances where they say, Melinda, I'm sorry, there's nothing else we can do comp here. We're at the top of the band, or you're special and you're on the band, or whatever it is we've
Right.
negotiated. And maybe
Right.
you still want a little bit more. Let's start to think about what milestones we can trigger for the company or how the team can grow or those types of things and how that can impact everyone.
Got it. Got it. Oh, I can't wait to dive in more. So, um, before you give us the strategies, I'm curious, how are people that are just high performing, why is it that they are still getting paid less? Is it because they're not asking, like you said, or they're not thinking about their compensation the way you just
Yeah,
described it?
the easiest
Yeah.
way to surmise this is you don't get paid what you're worth, you get paid what you negotiate.
Mm,
And I think there are likely a lot of women nodding along, female
yeah.
listeners here,
Yeah.
where they look at the work and their track record, and they might find somebody who is 5, 10 years their junior,
Mm-hmm.
maybe also a woman, but quite possibly a male, and maybe they make twice as much, and they don't know why,
Mm-hmm.
right? And it's not necessarily a meritocracy,
Mm-hmm.
and the world isn't fair. And you have to identify the people that will show up and be champions for you. And you need to flock towards those folks. And you need to negotiate with them and create a rising tide for everyone else as well. So uh, I think I guess the other point I would bring up there is that it's not very, it's the word I'm looking for, couth. I don't know. It's not very common for people to just talk about how much money they make.
Mm-hmm.
Like in our society, like you kind of feel like if I said, Melinda, I make $1 million a year, you're like, great, asshole. Like I didn't need to know that. So you're not necessarily talking with your peers or maybe your girlfriends at drinks after work saying like,
Yeah.
oh, I just got a raise from 250 to 265, or it's not
Yeah.
very common for us to talk about it. And so everything is kind of opaque
Yeah.
in terms of earning potential. So the best that we have is maybe salary transparency or benchmarks or those types of things. And so then we start playing by those rules, but there are senior leaders that break those rules every day. And
Mm.
so that can be a trap in itself. Like if you are naturally benchmarking yourself to what is visible,
Mm-hmm.
you're still likely not reaching your ceiling or your potential because you're limiting to yourself to the greater medium of what everyone else is talking about, not
Mm-hmm.
what everyone is making. So uh, I didn't really figure that out until I just talked to thousands and thousands of executives. And one of the first questions out of my mouth was, how much money do you make? And I can do that because I'm not a recruiter. It's
Mm-hmm.
illegal for a recruiter to ask that in many states, maybe all of them, I'm not sure. But you can't lead with that. You could say, how much money do you want to make, but not how much do you presently make? And
Mm-hmm.
since my job is to help improve your situation, I can benchmark and understand, like, hey, that's sort of unfair from what I've seen others making.
Mm-hmm.
And I mean, I've seen senior managers make $600,000 a year, and I've seen vice presidents and CMOs make 200,000 a year. So,
Hmm.
like, titling is not clearly the issue there. And I've seen people without college educations making millions a year, and I've seen people with, Harvard PhDs making 150,000 a year. So, like, there's no through line that makes sense.
Right,
And it's
right.
all in how you negotiate, and there's opportunity and there's luck involved in location and other
Nation.
factors. But
Correct,
those are
correct.
the things that a lot of executives know how to tweak those. They know how to tweak their network. They know, oh, I should live in New York or Boston or San Francisco, or high cost of living areas tend to pay more. Like there are
Right.
triggers like that that we know how to navigate. But at the end of the day, there's a lot of behavioral psychology, influence, persuasion, and rhetoric in the language we choose and how we choose to employ that through our networks over decades that
Mm.
influence the direction of where our compensation can take us.
And what about the culture of the company? And we're going to go to rhetoric and communication in a bit. And what about the culture of the company? Do you find that sometimes the culture of the company also plays an impact?
Oh, it absolutely can,
Yeah.
particularly those that want to work in nonprofit organizations. As an
Hmm.
example, like the culture of giving there tends
Hmm.
to make it that much more difficult to demand a certain compensation, which I would argue that if you're working for a nonprofit, maybe you're doing it
Hmm.
for a greater purpose and not just compensation, right? And I think as a society, particularly American society, we're very much up and to the right capitalist thinkers of like, I need to make more, I need more is more, and therefore that is good. And that's really a toxic trait in society. But when you
Hmm.
look at the end of the day, any company in the Fortune 500 is a capitalist company at its core, right? Any of the maybe the top 2,500, 3,000, 5,000 companies or whatever. At the end of the day, they will do what's best for the bottom line. That's just
Hmm.
how the company is designed to operate in the systems of which we have that. So they may put some lipstick on a pig, so to speak, and say our culture is different. But at the end of
Hmm.
the day, the folks answer to the shareholders, and the shareholders answer to making more money year over year and running those things. So um, we can pretend we don't see that, but that's just kind of how it works.
Right, right. So at the end of the day, you're saying that if we can articulate and communicate through whatever means our, what we do and how it ties to revenue or the growth of the company, then we're on the right track.
Or value in general, because again, not everyone can tie their work directly towards a bottom
Yeah,
line.
correct. Right.
Now, this is where it comes down to the motivations of who it is you're supporting. So if
Mm-hmm.
you're a product leader
Mm-hmm.
and you're supporting a CEO who has been, let's say, wearing the burden of running product for 5 years and they're exhausted from it,
Mm-hmm.
then you're taking an entire department and all of that lift off of their shoulders. That's a motivation of theirs, is to offload this so they can focus on something else. Now, that something else may not be business related. It
Mm-hmm.
could be that they get to spend more time with their family or their
Mm-hmm.
spouse. It could be that they have aging parents that they need to tend to, or it could be that they have stressors and their kids are going into college, or there's so many different factors of life things that can happen where I can no longer dedicate this energy to the business, and having somebody like a Melinda come and take this off my plate would be very valuable to me. And if you
Mm-hmm.
do a good job in the interview process of scoping out and understanding what those pains are,
Mm-hmm.
and then selling a vacation of what it would look like for those pains to be gone, where that individual can visualize working with you and then being freed from all of that burden, they'll pay you whatever they need, right? Or
Mm-hmm.
what's within reason. So those are the ways that we can break through some of that. And that's all psychology. So it's
Mm-hmm.
not necessarily the value to the company and the bottom dollar, because there are people that are, we call them tall poppies. They
Mm-hmm.
they make more than everyone else and they're protected for some reason, but they'll always be under scrutiny because of how much more that they make, but they can still keep that job.
Mm-hmm.
Right? So what untapped value are they
Mm-hmm.
doing? And in some cases, particularly in the C-suite, it has to be beyond your functional ability. So
Mm-hmm.
let's say you're a chief marketing officer.
Mm-hmm.
If you're the best damn marketer in the country, you will get that job, but you
Mm-hmm.
won't keep that job unless the chief revenue officer, the operating officer, the product officer, the CTO, the CEO, the board, whoever, also advocate for you. If you're not making their life easier across the entire organization, you will lose that job because at the end of the day, you don't have advocates or champions to keep that job. And
Mm-hmm.
then the tall poppy gets cut.
Mm-hmm.
So that's why you see a lot of turnover on some of these C-suite roles too. Even with some phenomenally talented folks that are functionally excellent, they
Mm-hmm.
haven't learned the behavioral psychology to maintain that C-suite power.
Right, right, right. So if, there is somebody out there right now who is wanting to ask or think about how they could, um, yeah, have a higher compensation, whether it's through direct revenue generating activities or whether it's like communicating my value. Like, where do we start?
So the easiest way to start, and this is the least confrontation you can have, is
Uh-huh.
maybe you're talking to your boss. Yeah, I've been here for about 9 months, right? 12 months. You insert your situation. And I'm just curious, what's the chance I could be earning more here?
Mm-hmm.
What would you need to see from me to be in a position where you feel confident advocating for me in the next comp discussion, as an
Mm-hmm.
example? Like that's relatively low stakes ask. So I'm
Right.
thinking about just what's the chance that I could be getting paid more here?
Mm-hmm.
Or one of my favorite asks here is if you were in my shoes, what
Mm-hmm.
would you start doing to be more valuable to the team?
Mm-hmm.
That
Mm-hmm.
could be even an earlier ask. And so that's probably framed more towards your senior managers and your directors that maybe it's significantly harder to negotiate at those levels than it is at the VP and C-suite,
Mm-hmm.
right? So those folks tend to be buried under more bureaucracy and more layers of structure and sometimes I'll call it false authority of, hey, we pay within this band and that's just the way it is kind of
Yeah,
thing.
right, right.
However, those bands can be broken. You just have to ask the right questions in order to do that. So
Wow.
there's a lot of tactics that we can use
Uh-huh.
to understand the value.
Uh-huh.
Sometimes and recruiters often do this, they'll say, we pay in a band between 200 and 300,000 a year.
Mm-hmm.
If somebody said that to me, I might ask, can you tell me the difference between somebody that say you'd pay at 225 versus someone you'd pay at 290, as an
Mm-hmm.
example? Like,
Mm-hmm.
what are the differences skill set wise? And then I might challenge them and say, where do you think I fit today to get them to at least anchor me? And then
Mm-hmm.
my job is to prove how to get in the higher end of that band,
Mm-hmm.
as an example.
Mm-hmm.
Now, I might also use that as information to show that I'm actually punching above my weight class. You mentioned these things. I also bring this value to the table that should be compensated for.
Mm-hmm.
Therefore, maybe the range should change for somebody like me, as an
Mm-hmm.
example. So there's obviously a lot of nuances to that in how to
Right.
go deeper into each individual's kind of
Right.
scenario, but that's kind of
Yeah,
how I
no,
think
it's
about it
good.
from a high
Right.
level.
Right. No, I love it. I love it. And do you negotiate that before you start to prove it and show it? Is something that you outline with your manager beforehand, and then once you've accomplished some of these things, you go back and you say, I did XYZ and
So I will say there's a couple things here too. So most of my experience is going to be incoming into a new organization,
mm-hmm,
not necessarily negotiating with a boss you've had for 5 years.
mm-hmm,
And
mm-hmm.
the reason why is that you have significantly more leverage when you move. And data suggests that those who move more frequently get paid more because they're moving to different organizations. And one
Right,
of the
right.
reasons why is because you've already given the employer the biggest piece of information they need, which is how much you're already willing to accept to do
Mm-hmm,
your job. So then
mm-hmm,
it
mm.
becomes a more difficult challenge.
Got
So
it.
I have focused mostly on the incoming, like we're going
Got it.
into an organization or the severance and breakup period where an executive is exiting and then the protections and the financial that's a lot more emotional control than it is pre-negotiation. Um, you do pre-negotiate kind of the value you're going to bring when everybody's excited to work with you. You sell enthusiasm and the future like you that's when your leverage is highest. And
Uh-huh.
that's also when we pre-negotiate severance and we win these terms before you get married, not after. So
Mm-hmm,
that's my focus point. Now, it doesn't mean it can't happen after you're
mm-hmm.
in an organization. It's just a little trickier. You have to develop more champions. You have to be very smart with how you ask questions while still delivering the work while also selling a vision beyond where they already know you to exist in the organization. So I call that like a lot of baggage. If you've been
Right,
at a company for 10 years, the first
right,
impression you made with everyone was who you were 10 years ago, not who you are today.
right,
So you have to retrain all of those people to see you at who you are today and not who you were, which is incredibly difficult. I'll give you
right.
a quick example of this. So my mom doesn't actually know what I do. And
She knows she was okay, go ahead.
but so like she knows me from,
Right.
little kid Jacob who was homeless 10 years ago.
Yeah. Oh.
And she would send me like jobs. She's like, "Hey, the hospital is hiring for a janitor. Would you like this job?" And this is nothing against janitors, it's a great job.
Right, right.
And she's like,
Still.
"It's unioned. It's like $22 an hour. Like you'll have benefits and you haven't had benefits ever." And I'm like,
Yeah.
"I just did 4 calls this week at 5,000 an hour each."
Yeah. Yeah.
And so like, she
I,
just doesn't know what I do, right? And I've never took the time to explain that to her, but it's just an example that people tend to remember you and like this is who you were. And
yeah.
so if you're in that situation, you might have to use some behavioral psychology, like, Melinda, you've been an advocate for me for 10 years. What are some of the ways that you've seen me grow since then? And how do you picture me today? And how do you
Right.
talk to other people about me today? And you have to challenge that. Maybe I was your little brother and you were my mentor, and now I've grown into this. Can you communicate with me at this level, or better yet, at the level beyond that, so that other
I
people
mean,
can start seeing me there?
I know, isn't that unfortunate though? Because if the top are seeing the rest of the company and all these, the leaders within that company is still stuck at that old role and then they're just stagnant. I mean,
But when
how
you
did,
change jobs,
yeah,
you sell
I'm
who
just
you're going to
saying,
be in the next role. And so they don't
right.
have any of
They
that
don't have the
baggage. So
baggage.
they can buy into the future of where you're headed, not where you've
Right.
been. And then when you look at how the entire industry works,
Mm-hmm.
or at least how we're trained for it to work, it's, what does your resume say?
Uh-huh.
And your resume is who you've been, not where you're going. You don't write the future
Yeah.
resume. You write, this is what I've done for 20 years. And so
Well,
it
if I
sets
was
them in the
yeah,
past.
exactly. Well, is that what I'm saying? But the CEOs don't have, I mean, for them to lose really great people, that's terrible. That's unfortunate if they're really
It's
not
expensive. Yeah.
expensive. And so how does a performance-based compensation organization look like? What is that? How does
So,
it structure that? So if I
so
were a CEO, I would structure that to give people opportunity based on their performance to pay them for what they're worth.
yeah, well, there's a couple of, well, actually, there's a lot of nuances to this too. So the way public companies do it is they throw a lot of liquid stock your way. And
Mm-hmm.
so you get paid an absorbent amount of money because the stock that you get is actually worth something right away and you get refreshers. And
Mm-hmm.
so I would imagine that more of the CEOs that listen to this podcast might be privately owned or maybe private equity, early stage, those types of things. You don't have the luxury of just giving away pieces of your company that are worth something right away. So it's incredibly difficult for you to compete with top talent that would prefer to go to a public company or prefer to go to, say, a foundational AI company because everyone says, "Oh, I want to go to Anthropic or OpenAI or Gemini or whatever." Like they all want to go there. So you're now trying to compete. And so what we want to do is we want to signal to the right people that we're willing to take a bet on them financially.
Mm-hmm.
And we also want to attract the types of executives that are willing to bet on themselves.
Mm-hmm.
So the trick here is that we want to de-risk the compensation discussion for the CEO because the CEO, like they're like, yeah, right, Jacob. Like I'm just gonna maybe the role says 300,000 for this executive. There's no way I'm just gonna pay 500
Mm-hmm.
and take their word for it. And I'm not suggesting you do that. I would rather you pay what's commiserate or what's in, something relatively fair. But then should they outperform, then we unlock different bands. Things that the only way that you're paying more is if they're succeeding more. And it's usually something like a 10 to 1 return for you. So in a sales role, let's say they grow the business $10 million and you give them a $1 million commission,
Right.
right?
That's pretty
That's
typical.
relative,
Right.
right? That's pretty typical or something
Yeah.
like that. Sometimes it's 20%, sometimes it's 5%. Deal
Yeah.
size matters. There's a whole bunch of nuances. The
Right.
trick is this takes a lot longer to really get alignment with,
Mm-hmm.
particularly with executives, because we're all trying to figure out where do we provide value? How do we trigger that? How do we measure it? That's the conversation we want to be having.
Yeah.
So, albeit it slows down the negotiation, but it
Right.
signals that you're negotiating for the right reason. And then if
Right.
you work with an executive that says, look, and I use this as a sales example, let's say you're making a sales hire and your sales rep says, look, I would actually rather just have all of my compensation guaranteed and not have to work for the bonus.
Mm-hmm.
What does
Mm-hmm.
that tell you about them?
Exactly.
They're
Right.
not actually in it for the right reasons. So the more they want to push towards guarantees,
Right.
And now, again, I'm not suggesting that your guarantee should be below market or that you're trying to just have that completely misaligned. I'm just suggesting that pay competitively, but provide an opportunity for them to create outsized returns under certain circumstances where everyone is aligned. And
Mm-hmm.
so in that instance, it may mean if you're the CEO, you need to connect with your CFO and your COO and your product leader. And let's say you're hiring a marketer and you want the marketer to create enough inbound traffic or enough brand awareness or enough revenue demand or something like you're measuring a couple things here. Or
Mm-hmm.
they're making the product messaging easier so the product team has skin in the game on what they're trying to do. And you align all of that. Or you have executional guidelines like we need to get something at a specific like every quarter we need to launch this. Or if you're a customer leader, our NPS score should be this and this. And if we get net dollar retention above 120%, we know the company's going to get an increased valuation from investors. Therefore, we're open to a new tranche of stock for that team for doing so, or something like that. So there's a lot of different nuances to this that what I ask everyone to think about is just be curious about what could be
Mm-hmm.
possible because
Right.
everyone has different motivators and it's not always just cash,
Right.
right? There are other motivators that could be a factor there. So you need to
Right.
spend some time to ask more of the right questions.
Right. 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 So awesome. So
But see how
good.
that's a pie expanding. That
Yes.
is okay. Melinda, you want to make
Yeah.
500K. This role pays 300.
Yeah.
I will give you an opportunity to make 800
Yeah.
if you can prove to me that we can get the pie this big.
Right.
Now, are you willing to make that bet with me? And you say,
Right.
yeah. And let's say you fail. I'm like, well, okay,
Y-
you got paid what everyone else would have got paid anyway.
Right.
So
Exactly.
no harm, no foul, right? What
Or
can we learn
yeah.
to do this differently? And then we start asking
Exactly.
the right questions to hit it next time, right?
Right.
Which is ultimately the purpose of growth.
Right. Right. And it helps the entire company. Both it's a win-win.
Ideally, again,
Yeah.
if the executives have the mindset of how can we have a rising tide raise all ships, not what's in
Right.
it for me.
Right.
What's in it for
Right.
we, not
Yeah.
what's in it for me. And sometimes we start off with we and we get really good at we, and then it becomes about me, right? Life circumstances change. And that's something that we don't want to be naive to. That somebody that, I guess one of the biggest frustrations people get when they hear you're a negotiation person
Mm-hmm.
is they think it's manipulation.
Uh-huh.
And it can be. And my definition of manipulation is extractive. I'm trying to extract from you. And influence is
Mm-hmm.
additive. I want to
Mm-hmm.
add for all of us. So I want to make the decision fatigue easier for you to accept my point because what I'm trying to do is better for everyone. Again,
Mm-hmm.
ideally. If it's
Mm-hmm.
just better for me, I'm manipulating. But if it's better for everyone, I'm influencing. That's
Mm-hmm.
kind of how I try to assess those things in my brain because I will have clients that you could tell might use it for evil, if not like kind of pointed in the right direction. Like, okay, no, let's think about the team again. Let's make sure this is a win
Yeah.
for everyone. Yeah.
I was like, oh yeah, that's right. I'm in there for
Yeah.
everyone. You kind of
Right.
wake them up. Wow. That's amazing. I mean, I really enjoyed this conversation because I think it's just I don't think a lot of people, organizations really think about it this way.
It's very difficult to think about it this way because we have a
Yeah.
lot of systems in the way that things have been
And
that create habits and we continue with those habits. And we have to start to challenge those habits
yeah.
particularly for your CEOs that are privately held
Yeah.
or bootstrapped or don't have the luxury of a bunch of public funding or those types of things. For you to be competitive with top talent, to
Hmm.
attract them, we're going to have to change the rules in some way. But it
Hmm.
doesn't mean that I want you to take on a bunch of risk. And it doesn't mean I want you to simply give and give and give. Because believe me, I've been a CEO myself. I've had
Right.
25 employees, and there are situations where I had nothing left to give.
Hmm.
But then again, I didn't have anybody on my team coming up with creative solutions to try to create like a groundswell over those types of things either, because that just doesn't particularly happen. So the CEOs
Right.
often need to be the ones that are open to start the conversation because they have so much influence through the organization. And they
Exactly.
need to be persuasive enough to challenge maybe their chief HR officer or maybe their board or their chief people officer and need to challenge, does it have to be this way?
Right.
Can we try something a little bit new? And what would we signal to top talent if we tried that? kind of
Right. And
thing.
top talent would take it. Top talent because they know themselves, they believe in themselves, they believe in the
So
outcomes that
that's and that's what I've seen.
see.
The framework I developed for it is called Signal,
Okay.
and it's because companies that use this
Yeah.
signal to top talent.
Yeah.
And it is an acronym, and we don't have time to go through the acronym and all the
Uh-huh.
little
Uh-huh.
phases here, but really we're structuring for the outcome, not for just the seat, right?
Yes.
So the outcome that we're trying to accomplish. But it will signal to the right talent that this is a company that will bend the rules and break for top talent. And top talent that comes to accept those rules will signal to the company that we're the ones worth betting on. Those that, like we mentioned earlier, that would prefer more guarantees and prefer to not go out and be a leader and not go out and do that. Again, there's a place for that in a lot of organizations, but those will be signaling that this isn't the type of comp structure for them, and that's okay.
Hmm. Hmm. Yeah. 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 I love it. I love it. And it is okay. So it depends on what kind of company you want to run. But I think that traditionally, I think if you can structure in a way with some type of signaling, then I think like everybody lifts each other up. And then the people are more they're more involved, they're more engaged because then they have something to aim for, something to feel like they are a part of something, a
And it
contribute.
should be transparent. The more
Yeah.
transparency around it, the better, because we
Yeah.
also want to avoid a lot of the pushback we get is particularly sales culture. We don't want coin operated executives where
Hmm.
everything feels like I have to coin operate. Like, okay, I got to dangle some money in front of somebody to get the action that I
Yeah.
want. Like, that's
Right.
not the type of culture we want to create. So there has to
Right.
be balance there. And we want to have usually fewer outcomes, more visible outcomes.
Uh-huh.
It's similar to when companies are setting their OKRs or their objectives and key results, and they're doing that publicly. The
Uh-huh.
companies that list like 8 focus points a quarter are the ones that don't get anything done.
Uh-huh. It's too
You need
much.
like we have one North Star. If we
Right.
don't hit this North Star, we're failing.
Right.
It
Right.
needs to be simplified.
Yeah. Yeah. I agree. I agree. I love that. So then when you help your CEOs with the signal process, what does that provide a lot of structure and how do they communicate? How did this CEO start to communicate that so people start to understand it? And I'm asking this question because Speak and Flow, we're all about, communication is not just a soft skill, right? It is how you move people. It's how you help people move together. So how do you tie this into how it's communicated and cascaded across the company?
Yeah, I think that's a great question. And I've seen CEOs do this in several different ways. A lot of them start to do planning with usually their people officer or HR and
Hmm.
say, look, we're going to try this. It's going to be a little bit differently. And I'm thinking specifically of this agency that I worked with, smaller
Hmm.
agency that they brought in. We're going to try something new
Uh-huh.
and we're going to offer opportunities for everyone here to earn a little bit more.
That's
Here's what
awesome.
that looks like. And
Mhm.
they announced it in all hands, and everyone was just like, oh, what do I need to do to hit that? Right?
Yeah. Yeah.
Especially in a time when there were a lot of doom and gloom with inflation and the markets and the wars going on. There's a lot of uncertainty. And then, oh, here's another all hands where we're going to hear about not getting our bonuses or whatever. And it was different. It was, hey, we're going to focus on this structure
Okay.
where everyone will have an opportunity to contribute to the greater. And if you have any thoughts on this, we're going to have an open dialogue with it. So they led with a lot of transparency. Now, I will caveat that saying that there was only 50 people in that company when we
Hmm.
were doing that. So imagine the
Still,
complexity
right.
if you're
Yeah.
going to try to do that at
Yeah.
a Fortune 500. We
Yeah.
have seen this happen at Fortune 500s individually for teams.
Uh-huh.
And so, kind of in a GM model, for
Yeah.
example, I've seen GMs bring this model across the line to advocate for 4 or 5 VPs on their team. And
Mhm.
so, really, it was just those 5 or 6 in the know about the comp structure, but it changed the incentive plan throughout their orgs beneath them as well. And
Mhm.
so, they started small and then
Okay.
started to see, like, okay, they're still in process here. So, jury's out on how effective this will be. But they have one GM unit within a Fortune, I will say Fortune 50 company. They created performance-based triggers on CapEx savings
Hmm.
across the org here. And we have 6, 12, and 18-month triggers. And each time those triggers hit, like $1 million or $2 million of cash and stock tranches come out for those 5 executives. And then they're aligning all the OKRs and KPIs for their teams and bonus structures accordingly to that. So it kind of cascades from there.
Okay. Okay. Wow. Awesome. I love that. We're gonna have to, yeah, touch base again with some of the teams that I've
Yeah,
been
this
working with.
is
Good.
relatively new.
Yeah, yeah,
This is
yeah. No, it's
something
good.
that I'm working with some top consulting companies. Think of your HR consulting companies on bringing this idea to CEOs. I mean,
Mhm.
we're doing these sessions in San Francisco and New York next month.
Oh,
So
okay. Okay.
like
So is it
yeah,
is it
they're
a public
fresh.
session?
Like
Public
yeah, this
session?
is
Okay.
yeah, fresh public sessions.
Okay.
And then we're starting to do compensation consulting and things like that. So this is all like you're seeing I guess, how the sausage is made, if that's
Yeah.
the right
I
term,
love it. Yeah,
while we're
yeah.
doing that. And so we
Great.
have multiple success stories with
Okay.
smaller organizations, some larger companies trying it. There are more of your challenger-based high growth companies that are trying it because they need to get competitive with talent. Because
Mm-hmm.
talent's like, why not just take a job at Facebook?
Yeah.
And I'll take a mid-level job. I'll make $800,000 a year,
Yeah.
and I don't need to go risk, I don't need to get a promotion to go work for a smaller company for half as much pay. Like, why would I do that? It
Mm-hmm.
doesn't make sense. Or, if I am going to leave Facebook and all of this great money that's getting thrown my way, I'm going to go to OpenAI or Anthropic, or again, one of the hot, sexy AI companies that's going to make or break. So, and there are periods through our history where a lot of the top talent like goes to one area. So it's like the cloud wars, and then we have AI, and then we have, so the things move around like that. And so, um, ideally, this is a way to combat some of that migration and bring some great leaders to your organization that don't care about those things, but care
Mm-hmm.
about the groundswell of supporting a team and working in that environment. Which, I talked to some of the most successful executives in the world, and they care more about that than you think. They just don't know
Yes.
how to. They're scared to talk about it because they don't want to sacrifice their compensation necessarily. But the
Right.
amount of times we're like, yeah, I don't want to work 80 hours a week for a soulless company. I want to work with a team that believes in X, Y, and Z and have fun. You know,
Yeah.
there are more of those people that exist than you think. We're
Yeah.
just not structuring a world to find them.
To find them and to foster that type of environment.
Well, and everyone says that they feel that way. I know the CEOs listening to this will be like, yeah, they all say they want that, and then they don't deliver. So I've been on that side of the coin too, where
Yeah.
it's easy to say that in an interview process when everyone's wearing their Sunday best. Yeah,
Yeah.
Melinda, I really care about the team, and then
Yeah.
6 months in, you're like, all right, I got an offer somewhere else for twice as much money. What are you gonna do?
Right.
And then
Right.
you're feeling
Right.
like you're trapped. Yeah.
Right. 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 I love it. And so, if there's an executive out there that would like to have you be their agent or attend one of your workshops, seminars that are in San Francisco or New York, how can they find you or get a hold of you?
Yeah, so I don't have any social media, so you won't find me on LinkedIn. I do have thinkwarwick.com is probably the best way.
Okay.
And I created a website that you can't even scroll on. So you can't get lost. It's just my face and a little bit about what I do.
Love
Uh,
it.
and then I have a blog called Execs in the City,
Uh-huh.
and I write once a week. It's a Substack bestseller. And I will be moving that to predetermined.com here in the next few months. So that will change, but I'll set up redirects and everything. But for now, it's
Okay. Okay.
execsinthecity.com.
Wonderful. Well, check it out. Check out Jacob's thought leadership around this. It's really impactful and I found it very interesting. So thank you so much for your time today.
Thank you, Melinda. It's happy to be here.
Yeah, it's fun. And thank you, audience, for being here. I trust that you got your takeaway. Remember, anytime you have a chance to communicate, communicate what matters, communicate consistently, and let's move people together. Take care. Bye-bye. Thanks for tuning in today. If this conversation sparked something for you, if you're thinking, we talk a lot in our organization and things still fall through the cracks, we're not getting the results that we want, I've got something for you that might help. It's called the Accountability Self-Assessment, and it takes less than 60 seconds. In one quick review, you'll get real insights as to why accountability and results are slipping on your team. And you'll walk away with a legacy accountability card. It's a simple one-pager framework to help you and your team move talk to traction. Because the legacy of you and your team is built more than just meetings. It's built on clarity, consistency, and follow through. So grab it today. Go to speakandflow.com or click on the link in the show notes. It's free, fast, and built for busy leaders like you. See you next time. Until then, keep communicating with impact and momentum.